really the top headline across the world tonight, because in 2 hours from now, or a few hours from now, Greece is set to default on its International Monetary Fund loan. The country's finance minister has now said categorically that Athens will not be meeting tonight's deadline of its bailout debt. The country will therefore be defaulting its loan of 1.6 billion euros to the IMF. Greece facing a huge debt repayment of 242.8 billion euros, and if it defaults and decides perhaps to vote no against the referendum which has been called on Sunday, it could move out of the Eurozone, and that could affect the world economy. What exactly is this crisis about? Listen in.
It's Greece's race against time. Athens is to repay the International Monetary Fund a debt of 1.6 billion euro by 3:30 AM India time. But it is on course to miss the repayment. The Greek Prime Minister remains firm over opposing the bailout offer, hinting that he'd step down if Sunday's referendum backs the deal.
Την απάντηση θα τη δώσει ο ελληνικός λαός. Αν ο ελληνικός λαός θέλει να προχωρήσει εις το διηνεκές με σχέδια λιτότητας.
Here's what experts say Greece should be doing at this stage. Firstly, Greece needs to address its looming debt payments. It's worth noting that the repayment tonight is a part of a bigger debt that Greece has to repay to the International Monetary Fund and the European Central Bank by the end of 2015. Experts say Greece may need to secure another bailout package for repayment of its debt. The referendum slated for Sunday will decide whether Greece will stay on in the Eurozone. Importantly, July is when Greece owes the European Central Bank 3.5 billion euros. If it fails to repay the loan, Greece banks will be taken off life support.
The crisis was staring Greece in the face for years, especially after Europe's 2008 debt crisis. Greece's announcement that it had been understating its deficit figures for years shut it out from the financial markets, leading to bailouts by the International Monetary Fund, the European Central Bank and the European Commission, which it is now set to default on.
Έχουμε έρθει εδώ σήμερα γιατί πρέπει να πούμε στην κυβέρνηση και σε όλη την Ευρώπη ότι δεν πρέπει να κάνει πίσω τα μέτρα λιτότητας.
Μας είπε να μην προτιμήσουμε την αυτοκτονία επειδή φοβόμαστε το θάνατο. Δηλαδή μας ετοιμάζει το θάνατο. Μην αυτοκτονήσετε, θα σας καθαρίσουμε εμείς.
Back home, India is watching the situation closely, fearing some impact if Greece fails to repay the bailout debt tonight.
If Greece actually decides to exit the European Union, you could see this for the next 6 months, also 3 to 4, 6 months. In the short term, there would be a lot of volatility. Sentiments change in the global market. China clearly isn't doing well. So there is sort of those bout of risk aversion which enters into the global market. That happens, and the Indian market is no different. We will also suffer from that.
With Greece's finance minister making it clear that Athens will not repay the debt loan, the country's Greek tragedy has just deepened. All eyes now will be on how it impacts the world economy. Bureau Report, India Today.
So what next, and how will India actually be affected? Joining me now, Rhythm Desai, Managing Director, Morgan Stanley, joining me from Mumbai. Professor Kevin Featherstone, Professor of Contemporary Greek Studies at the London School of Economics, joining me. I'm going to come to you, Professor, first. Is it now a done deal in your view that A, Greece defaults later tonight, and B, will perhaps vote against the referendum, will decide perhaps to withdraw from the Eurozone rather than accept austerity measures?
Well, I think as your viewers know, Greece invented drama, and this week is certainly full of drama. There is news from Greece breaking this afternoon that in 20 minutes' time, the Euro group of finance ministers will hold a teleconference call to discuss the latest Greek proposal. And the latest Greek proposal is to have a short-term deal and then a two-year rescue package. We don't know the contents of this proposed deal from Athens, but it is possible that something can be done which would avoid a default this evening to the IMF.
A
default which, as you say, could have major consequences.
That's interesting. That's interesting you're saying, Professor, of course, that Greece invented drama, and who knows, there may be a dramatic twist even before midnight tonight. But Rhythm Desai, as India and the rest of the world watches, what's the immediate short-term impact that you see should Greece default later tonight, and should they vote no in that referendum?
Well, Rajiv, as we have seen yesterday in the markets across the world, volatility is almost guaranteed. But, I would actually opine here that the world is a lot better prepared than it was for, say, the financial crisis in 2008. So this has been in the air for quite a while. Banks in Europe, for example, I think have reduced exposure to Greece. I think ECB is ready for a backstop. So I think the impact on markets probably will be limited. There are medium-term implications, of course, which we can go into, but what happens to Ireland, what happens to Italy, what happens to Portugal? Because any deal that is struck with Greece will have implications on all these countries that are as vulnerable, if not equally vulnerable as Greece is. So I think the market implications, well, we've seen kind of a trailer of that yesterday, but I would say it will be limited because there's been a fair bit of preparation in the event that Greece leaves defaults and leaves.
Capital outflows out of India may be hit. Software and engineering exports to the European Union may be hit. Fear of, as you said, volatility in the markets. Could the rupee depreciate? Are we, from an Indian perspective, relatively insulated, or will we also take a hit?
So Rajdeep, actually, if you go back to the summer of 2013, when we had the so-called Fed taper tantrum, India was very vulnerable. If you recall, there was a phrase coined, in fact, by Morgan Stanley called Fragile Five, and we put India into that basket. We know what happened to the currency then. And I think you hosted a TV show and I was part of it, and the rupee was at near 70 and there was a lot of panic. But I think 2 years onward, we have actually come a long way. Thanks to some really good central bank banking and Governor Rajan's credibility, a lot of work done by this particular government over the last 12 months. The fact is that India's current account is in near balance. Fiscal deficit is down 250 basis points. Real rates are up. Inflation is down. So the macro in India looks actually quite strong. And in fact, I would opine here that India is probably one of the less vulnerable countries in an emerging context to a Greece problem.
Let me get a final word from you then, Professor, there in London. The referendum comes on Sunday. Do you believe Greeks would prefer austerity and remaining part of the European Union? Or are they willing to risk the possibility of falling out of the European Union, not having the euro, going back to the drachma? Do you believe that that is a real possibility, that the majority of Greeks do not want austerity?
Well, I think the prospects actually would be for the referendum probably to say yes. How big a yes is very uncertain. But I would be surprised if the referendum led to a no. And this is because the government is saying that they wish to have a strong voice in the Eurozone. And I think people recognize that the referendum is a decisive point. It's the biggest choice that Greeks will make in a generation. But I think they recognize that staying in the Eurozone will mean some continued austerity. But they're making the calculation that the alternative is going to be worse.
Okay. We're going to leave it there. Obviously, all eyes on Greece, and that hasn't been the case perhaps since when? Since Alexander the Great, and that's a very long time ago. So clearly, Greece now at the center of world attention. Professor Featherstone and Rhythm Desai, pleasure, joy having you join me here on the news today at 9.